So far, 2023 has been the year of the HMO. So many people are changing tactics when it comes to investing in property from buy-to-let to HMO. It's been quite a while since I've spoken about HMOs on this here YouTube channel, so I thought today would be the perfect opportunity to talk about mortgages for HMOs. Now, if you clicked on this video, you probably already know what an HMO is. However, for those of you that don't, this is simply a property that you rent out on a room-by-room basis. HMO stands for House of Multiple Occupancy, so there are going to be multiple occupants within one house, instead of renting the property on a buy-to-let basis to a whole family. So that's the basics of what an HMO is, but in this video we're going to talk specifically about mortgages for HMOs. Now, before we get into it, if you could do me a massive favor and hit the subscribe button. We've got over 200 videos now on the channel for you to sink your teeth into, covering all things property finance and property investing, and that's all we talk about. So please hit the subscribe button and the notification bell to make sure you don't miss out on any future videos. So back to HMO mortgages. Now, a lot of our clients invest in HMOs here at Grand Union Finance, and of course, a lot of them need mortgages for them. So in this video, we're going to dive into a few things that you need to know before you take out your first HMO mortgage. Now, the first thing we need to talk about is, can I actually get a mortgage for an HMO? Now, you might think that's a stupid question, but it is one that we're asked very, very frequently. The answer is, of course, yes, and you need a specific HMO mortgage for an HMO. You can't just take out a buy-to-let mortgage, and this is because buy-to-let mortgages are specifically for properties that are going to be rented out to families, and typically these are C3 classified. HMOs are usually C4 classified, or if they're large enough for 7 or more people to reside in the HMO, they will need planning permission to have what we call sui generis classification. So there are specific HMO mortgages for these types of properties, for these types of property classifications. Typically, the rates for an HMO mortgage are that little bit more expensive than on a buy-to-let, but that's because lenders see it as a more advanced strategy, and it's only really for more experienced landlords. So that's the first thing that we really need to talk about when it comes to HMO mortgages. Do I need experience as a landlord before I can get one? Well, traditionally the answer has actually been yes. You would have needed at least 1, maybe 2 years worth of experience as a landlord before you could even take out an HMO. As I said before, lenders see this type of strategy as advanced, and so they actually want somebody with experience, not someone that's just diving in at the deep end. That creates a massive risk for them as a lender. However, nowadays there are a lot more lenders out there that will actually lend to you as a first-time investor investing in an HMO, which is great news, because I think in 2023, HMOs are one of the best strategies that you can look at because the cash flow on them is just so much better. Now, if we take that one step further and you're a first-time buyer and a first-time landlord, it is pretty tricky. There are maybe 1 or 2 lenders on the market that can give you a mortgage straight off the bat. Otherwise, it might be something like a bridging lender that we need to look at first and foremost. Now, another question that we get asked a lot at Grand Union Finance by our clients is, how much do we need to put down as a deposit when we're getting a mortgage for a new HMO that we're purchasing? In the past, we've actually been able to get away with 20% deposits, but nowadays there are fewer and fewer products where you can do this. Most mortgages will need you to put down a 25% deposit when you're buying an HMO straight off the bat. Another question we're asked is, do I need a license and the property to be registered as an HMO before we can actually apply for an HMO mortgage? The answer to this one is a little bit grayer, because although we will need that HMO license and registration to be in place if the local authority requires it by the time we complete, some lenders will allow you to start the process before you actually get that license in place. All we need to do is show evidence that that process is underway, and there are lenders out there that will allow us to get cracking on the mortgage application. And while we're on the subject of the local authority, another thing that lenders are looking at is what the minimum criteria is that the local authority that your property is in has for HMOs. Generally, this covers things like room size and communal space that's required. Now, there are lots of local authorities, of course, across the UK, so it will be silly for me to run through every single one of them and what their minimum requirements are. The best thing you can do is to search on Google for your area, for your local authority, and for your HMO officer, and you'll be able to find online the minimum requirements that you need. However, one thing that we do know is that you are more than likely going to need a certain amount of communal space when we are applying for a mortgage for an HMO. This is because the lenders actually want to see it, and typically this will go over and above just a small kitchen area, which is what a lot of HMOs have, unfortunately. Even if the rooms are en suite, so they are larger and they've got, more space for each tenant to actually have for themselves, lenders do still want to see that there is communal space over and above the kitchen. Typically, this might be some kind of dining area or a living room. This doesn't necessarily need to be a separate room to the kitchen, but the rule of thumb I say is that if you could put a breeze block wall down the middle and the two could potentially be two separate rooms, you're probably in the right ballpark. The last thing I'm going to cover on this video is actually how mortgage lenders value HMOs. A lot of the time our clients come to us and say, Sam, I need to refinance this HMO and I want it on a commercial valuation. Now, first and foremost, what is a commercial valuation? And secondly, can we actually get them for HMOs? So a commercial valuation is how traditionally commercial properties have been valued, and this is based on the income that the property generates. Typically, lenders will use various different formulas, but the basic one is that we'll look at the annual income, we'll take off a percentage for maintenance and management fees, and then we will divide that by the local yield. This gives us a figure, and that is how much the property is valued for mortgage purposes on a commercial basis. But can we get one of these particular valuations on an HMO? Well, the answer is yes and no. Traditionally, a commercial valuation on an HMO has only been possible when the property is classified as sui generis. So if you remember earlier on in the video, we were talking about the different classifications of HMO. This is an HMO that can house 7 people or more, and you'll need planning permission to do so. Now, the reason why lenders only prefer to do this for sui generis classified properties is actually because you would need planning permission not only to get a property to sui generis classification, 7 people or more, but also to convert it back. Only allowing commercial valuations for sui generis classified properties was their way of lowering the risk that you were going to take out a commercial valuation, then convert the property potentially back to a family home, where you may even end up then being in negative equity. More recently, however, we are finding there are some lenders that will look at a commercial valuation for smaller HMOs, typically 6 or 5 bedroom HMOs, and mainly ones that are proper hardcore HMOs with en suites, etc., because they can see that they couldn't just be sold on the open market right now as family homes and couldn't be easily converted back to family homes. So some lenders are a little bit more comfortable now with these modern HMOs, which are, all singing, all dancing, all en suite HMOs. They're not going to be family homes anytime soon. Well, there you have it. There are a few things that we get asked on the reg here at Grand Union Finance about HMO mortgages. If there is something, however, that I haven't covered that you want to ask me about HMO mortgages, just drop a comment and I'll be sure to come back to every single question that is asked as soon as I possibly can. For now, guys, thanks very much for watching again, and I'll see you on the next video.